Grindrod's interim headline earnings per share slumped 42% to 55 cents. And joining us in studio now is the company's CEO, Olivier. Thanks so much, Alan, for joining us this afternoon. Well, in line with your profit warning, we've had first half profits falling back. You set up expectations for a fallback of as much as 45%. It's come in at the top end there. Revenues, though, up 19%. So take us through the pressure points right at the top.
Yeah, I think it's very clear that shipping has been the pressure in the business. Shipping earnings are down 81% on the first half of 2010, and that is a result largely as freight markets having come off substantially, not volumes, as you mentioned, that revenues are up in places, but it's really the shipping markets have come down, and that's as a result of oversupply, particularly in the dry bulk sector of new ships coming into the market. Volumes are still growing. But freight rates are falling because of that oversupply.
Let's take a look at it, because challenge is that there's still that oversupply of ships that have been coming to the market. You've still been buying, or certainly you've been adding to your balance sheet anyway, the investment that you have in ships. Is that simply a feature of ship prices having declined and it being an opportune time right now?
I think if you look at where we were 2 or 3 years ago, we would have ended up then, if we had taken delivery of all the ships that we had ordered and that we currently had, we would have ended up with 54, 55 ships. We're now at 35 ships. So we've actually, through this process, we've actually reduced our exposure to the market a little. And that's we did that largely in 2008 at the peak of the market. When we divested, we put about 600 million rands worth of profit on our balance sheet in that year. And it's a cyclical business, shipping. It always has been. And it's a matter of trying to get your investment timing right. And also, if you are going to exit the market to any extent or contract out your exposure, it's a matter of doing it at the right time.
So let's get into some of what's influencing the decisions you're making right now. I mean, what's your view in terms of what you're anticipating for this business moving forward, and so the operating environment on the shipping side of things as a whole? Share that perspective with us. Are we at the bottom of the market just yet?
Yeah, I think what is driving this is not supply, not demand side. The demand side is good. We're still seeing improvement in demand, 6, 7, 8% a year in commodity demand that is being shipped. The problem here is particularly in the dry bulk market, and particularly at the big end of the dry bulk, that's the Cape-sized ships which carry coal and iron ore. We've just seen too many ships ordered, too many ships delivering into that market. So it's the supply side that's hurting that market. What we are seeing, though, is that is slowly, it isn't as big as we initially anticipated. Some of the ships aren't delivering. We've had slippages as much as 30 or 40% in a lot of the markets. So the supply is increasing. It's too much at the moment, particularly in that big market. But it is slowly waning, and there are no new orders being placed. So slowly we're moving towards a position where eventually we will get back into equilibrium. On the tanker side, where we're also exposed, and the small dry cargo side, we're much closer to that because the order book is far smaller.
Yeah, of course, this entire operating environment has come to bear on many shipping companies in the industry. They've put pressure. How are you weighting risk at this stage of the game?
I think we've shown our diversity of our business. We not only invested in ships, we invested in terminals, ports and terminals, which clearly is in a similar industry. We ship the same, the same commodities go through our facilities as go on our ships, particularly items like coal and the minor bulk materials like chrome, ferrochrome, etc. all go through our ports and terminals. And there's a major shortage of infrastructure in Africa. There's a major shortage of infrastructure in the regions where we invested. And we're taking the opportunity now, a process which we started 5 or 6 years ago, to expand our capacity in all those areas.
Are you taking those opportunities further up north as well?
Well, at the moment we focused on Mozambique. We have a share in the Maputo port concession. We've done a lot of work there. We've deepened the port to give access to bigger ships. We've substantially expanded our coal terminal in that area, and now we focused on building a brand new coal terminal in that area. At the moment we can do 6 million tonnes a year of a mix of coal and magnetite. We're looking at a 20 million tonne facility which we hope to start building fairly soon.
Of course, just looking ahead for Grindrod as a whole, 2010 was a financial year where more than half of your earnings came through from that non-shipping business. Is it likely that we're going to see that trend accelerating from here on out? And where do you see the split between the two in terms of revenue earners for the company?
Yeah, I think that's a difficult question to answer. I think what we do expect to see is as we fully utilize our capacity, and we're nowhere near full utilization of our capacity because we've been rolling out additional capacity. Just this year we've added 2 or 3 million tons of capacity to our ports and terminals. So slowly as we roll it out, we're utilizing it. So we've got capacity. We're getting very good rail delivery from Transnet Freight Rail into the ports now, particularly Maputo Port. So that's growing. So we expect that business to continue growing, the capacity to grow, the revenues to grow, and obviously the profits in those businesses to grow. On the shipping side, cyclically we're at the bottom of the market, and really it's a combination of that supply side reducing and growth in this continued growth in commodity, and then some economic growth, particularly in the bulk liquids area, fuels, and we'll see the shipping earnings start turning. How soon that is, I think on the tanker side we'll see it earlier than the dry side, but certainly we expect to see those turn, hopefully not in the too distant future. As
you pursue some of the growth opportunities, and specifically as you say on the freight side of things, I mean, we've seen the gearing on your balance sheet creeping higher and higher. It's standing at about 50% right now. What's the top end as you see it for that debt to equity ratio?
Yeah, it's something that we often get asked, and 50% in a shipping company and a capital intensive company is not a high gearing at all. Ports and terminals, certainly you need significant capital to build ports and terminals, and they can actually take a significant amount of debt. 75% debt to equity is, or 75% debt, 25% equity, so that's a significant gearing that you can put into these long-term projects. Yeah. And they're 30, 40-year projects. Ships are 25-year assets, so they can absorb a lot of debt. I would think a comfortable debt equity for Grindrod is around about 100%. Shipping companies, traditionally, they can go as high as 200 or 300% gearing.
I guess it's not a high gearing at all, but it's all relative, and it's relative, I guess, the market looking at things to where you were a couple of years ago. Thanks so much, Alan, for joining us this afternoon.